As we turn towards the international market, we always like to talk briefly about what's happening with Russia, what are flows doing, because Russia is, again, that big heavyweight in the market, and given all the sanctions, the less oil going through pipe, how much of it can go into the international floating market, is really going to be meaningful. So here, we don't see much changing in general in terms of where we are. We think we're finding kind of that steady state. They're going to try to push that a bit higher. But if they can't get it into the market as oil, they're trying to get it into the market as diesel, because the Middle East has been buying a decent amount of their diesel, distillate fuel oil, burning that, exporting their diesel and distillate into Europe and the US or the Atlantic Basin in general. But they would like to get this back above 3.5. The question is going to be, can they? How can they? Is there a demand or market for it? Because China is really stuffed in terms of the amount of crude that they have, and how much are they going to want to come through, as we did the deep dive last week on ESPO, where some of those shifts are coming from. But the other important thing to watch as we come into the Med and into other areas is the CPC. So Kazakhstan's oil flows into the CPC pipeline are significantly reduced because of lower output at projects in Kazakhstan. Oil intake is lower due to maintenance at the field. Intake from Kashgan is also reduced because of output is halted at the field. So again, there was some maintenance there. There's been some back and forth in terms of what is going to happen between the Russian courts and Kazakhstan. So this is going to be a problem when you look at Europe and how are they going to source additional crude, because Libya was only really able to bring back 100,000 barrels in July. It'll be more normal, or at least we're expecting. We're going to talk about that a bit more as we go into and later in the segment, because Libyan flows are going to be very important in terms of how quickly can they come back, and is there going to be peace right now, or is there going to be a reshift of allies, who is allied with who, and then once that is set, then you're going to have more protests and infighting, which will again slow down production and exports, but we'll talk about that in a minute. So then when you start looking at Russian Asian customers, again, staying elevated, but you do have China slowing. This is just because they have so much crude. They're still not seeing their operating impacts. They still have a lot of crude in floating storage. There's a lot onshore. So as we come into what is a slowing period normally, it's as you can see, it's seasonally speaking, it normally slows down. And that's going to accelerate as we go into September. But if prices come back down, euros have bounced a bit from being down $35 per to dated Brent to being something closer to about $23. So again, there's going to be a bit some ways to support that. Then when you look at Dubai versus dated Brent, here you can see a big drop. So the drop was down to about a $7 spread. So this actually pushes the Middle East, or I should say Saudi Arabian benchmarks, out of the money. So they're about 9 to 950 above the Dubai swap. So when you look at Dubai, which is now, so really Brent is starting to compete again. This is just pricing. This is just demand. You're getting this big drop. So now it's going to be important to see, how does Saudi respond? Because remember, the expectations that we talked about last week was that Saudi was going to increase OSP, as official selling prices, again, and actually take out the highs from May, which is over $9.50. Now with this big drop, do they pause that and either keep them here or actually move them lower to try to maintain that competition? Because they're losing demand to a degree from into Asia, India, and China because of Russian flows. Do they start to try to compete a bit more, as they've started to compete a bit more into both Europe and the US, which is what we're starting to see show up at our coast? And this is, I don't have an answer. If I was them, and obviously I'm not, I would not be raising prices. I don't know if I would cut them, but I wouldn't increase them. But again, it's going to be important to see how does that shift as we go forward. And this could also increase exports, because the difference that we always talk about is there's production and there's exports. So even though production has been, flat to down for the most part versus what was what OPEC Plus agreed to and what we talked about in segment 1, exports have been elevated. So again, you have to factor those two pieces in, where even as production has come down, exports are back towards very normal, even above normal levels. It's been a bit cooler in the Middle East, so there's been a little bit less electricity consumption. They've been using more Russian product versus their own, and again, that is freeing up more to be exported. Crude oil in the water still staying elevated. That comes back to the Russian discussion. Again, we just see it staying at this elevated front with not much movement up or down. But again, that's going to take out, because if you look at 2020, that yellow line, you have a massive drop. And as we just stay flat, which just means that we're going to take out those highs and be at all new all-time highs. Crude oil in transit. Here you can see just staying at all-time highs, and just given the increase in miles per ton, we're just going to continue to see oil remain elevated in transit. And now as it converts from transit, we're seeing more and more of it convert into floating storage. And we are currently right at where we were in 2021. And we see that creeping higher as more crude shows up in the Gulf of Mexico, more crude shows up in Asia. Again, those long timing delays in terms of miles per ton, that's going to cause some increases. And Asian floating storage below 2021 levels, we do expect this to creep higher, but not really go back to where we were in 2021, because there's so much floating, so much onshore storage. You're starting to see them now not purchase the same level, which again is coming back to where we're seeing them in regards to both Middle East purchases, West African purchases, which we're going to talk about Angola in a minute, as well as Russian. So again, you're seeing some of that slowdown, which is going to pull some of that off of floating storage. Still stay elevated, but obviously not where we were in 2020 and 2021. Shandong refiners still strong, coming back a bit, but again, it's still elevated for this point, and we're just not seeing the activity pick up in some of the other areas due to that really terrible demand, which we continue to highlight in the Econ Show segment 5 when we look at not only just Asian economic data sets, but also Chinese, where we continue to see those problem areas, with West Africa continuing to set new seasonally adjusted all-time highs. Obviously, it's off of where we were in the highs of 2022, but you can see we're still not clearing crude. So yes, as we said in segment 1, you are not seeing, you're seeing West Africa, Angola, Nigeria, Congo missing their targets, but they're also not clearing crude. They still have a lot in floating storage, which again creates that disconnect. And now with China slowing purchases again, that's where we're continuing to see some of these problems. And it's going to put more crude in floating storage in West Africa. And just give you an idea of what's coming into China, continue to see a drop in what super tankers or tankers in general are signaling China, which is indicative of what we've been talking about: slowdown of purchases, slowdown in floating storage. And that's going to put more crude on the water. And you're going to see some of those discounts increase, which will be a benefit really to other areas. Excuse me. That'll be a benefit for other areas around the globe, especially Europe and the Americas. Now, when we look at U.S. crude exports, here you can see gasoline dropped 70. Gasoline exports increased 72,000 barrels a day. That's over the 5-year. Again, trying to balance their gasoline storage because they are above the 5-year average, and that's including 2020. So they have gasoline to send out to do something with, and Latin America continues to be a fairly strong buyer. Now, distillate's the interesting one because we were expecting and we were seeing a bit of a slowdown, but here you can see that there was an increase of 139,000 barrels a day, which is 385,000 above the 5-year average. Now, this could be timing delays because we do see that slowdown in terms of the ships that we're tracking. Sometimes it takes time to file. And it's also could just be timing. There could have been something that we thought had already been kicked out, but it actually fell into this week. So we do see some of that coming down, but it will stay above the 5-year given what we're seeing now in terms of new orders, new flow going into the international market. And then when we look at propane, up again, 41,000 barrels, again, 421,000 above the 5-year, very strong. Crude oil exports had a drop of just over 1 million from 4.5 to 3.5 million barrels a day. That's right in line to, we were saying that we had to take up our estimates again to 3.5 to 3.7. Again, so Brent is currently trading at 97. WTI is trading at 91. You still have a wide discount. It is not $10 as it was the week ago. It's still $6. I mean, we still have to roll WTI, which will tighten it up a little bit. But again, you're seeing some of these benefits where it's going to open it up a bit. It's still at a discount. That's going to incentivize more purchases into Asia. You're going to continue to see those shifts. Shipments of Middle East crude and condensate continues to come into U.S. At a strong level. That's going to be a benefit again. And Middle East going into and replacing some of that Russian diesel, but crude exports are going to stay strong, which is going to keep PADD 3 flat or flat-ish in terms of storage as imports remain elevated. So then when we start looking at this overall, gasoline exports, again, breaking to the high. As we were saying, it's just going to stay at the top end of the cloud. We don't see it coming back to the 5-year as they try to manage storage, and Latin America continues to pull down more product. This was the one that we thought was going to stay above the 5-year average, but again, fairly close to it. Instead, it had a nice breakout. Now, we do think it falls back within the cloud, but it's staying at that elevated level. Ethane exports, again, still staying strong. We're setting records for the year. We don't see that changing. Crude oil exports pulled back, but you can still see how elevated it is, and it's important to look at it against the 4-week rolling average, sitting at 3.7 million, and we just see it's going to pull back a bit, but again, still staying at that 3.5 million on average and staying strong. Propane, as you can see here, just can't stop, won't stop. All of it continues to get pulled into the market. Now, when we look at crude exports, here you can see Angola with fairly stable in terms of what is expected for September. Norway creeping up just a bit, but not too much in terms of a change. August, we're still waiting to see what Libya comes out with. So there's an expectation that Libya is going to come with about 860,000 barrels. The Russian Federation is an ensemble of what is coming through pipe, CPC, as well as exports from other areas. And you can see that it's slowing down a bit. That's just a mixture of what can they sell, where are the cargoes, because as miles per ton increase, you're absorbing some of these spare cargoes and spare ships. So then the rates are going up, which then again also causes people to slow down a bit because they're like, look, I'm not going to pay up for shipping. I can wait. I have enough in storage. I'm going to let some of this play out so I don't have to get hit really hard with some of these tanker rates. So now when we look at the pace, because you look, Angola, fairly sluggish in terms of where it is. So when you look at about 10 out of 37 Angolan cargoes for September have yet to find a home, that's fairly normal for their pace, but China's demand is showing more signs of easing as narrowing refining margins when you look at where we are in terms of gasoline versus distillate. Senegal has yet to sell its last spot cargo, which it last offered at $1.90 on July 29th. So there is some of that, it's important to understand they're typically sold by the previous month. So the fact that there's still July available just again points to the problems that we're talking about when we're looking at the flows between West Africa, as the comments were always, well, everyone is missing their targets. It's like, but are they missing their targets because they can't produce, or they're producing a lower rate and still can't sell? Vital cut its offer price for Dahlia on the Platts window. Senegal also reduced its offer price for a separate shipment of Dahlia for mid-September loading. Again, trying to get and find that movement. When you look at Vital offered so it was at 60 cents and it was previously at $1.90. IOC purchased a combined of 3.875 million Angola and Nigerian crude. Nothing too crazy in terms of what those look like. And then when you look at spot offers, so Senegal cut from this, so they cut its offer price again to the $1.90. It's now gone lower. It was $2.10. Gunvor sold Fortes to Glencore at a lower premium than its previous offer. And then when you look at the Gunvor sold the Fortes at $2.25 above dated Brent, which compares to $3.16 previously. So it's not that you're seeing this huge drop into below dated Brent, but you're seeing some of these overhangs as we've been talking about in general, which as they're trying to find buying, as some of this crude continues to get pushed back out on the water, as your biggest buyers, because Asia, India, and China were absorbing a decent amount due to the premiums, but now they've bought a lot. They're waiting for the cargoes to show up. There's no impetus to really buy more, as we're seeing some of the slowdown in refining driven by a cut in refining margins. Crude oil storage dropped. You can see it's right in line with where it was in 2021. As we've been saying, that Chevron pattern sideways. The Rhine River, though, being so low, lowest level since 2018, could parts of it are already shut down to trade. It could shut things down further. That's going to impact how quickly can some of this crude get moved from offshore in the ports downstream, because some of it moves on barge. You're seeing it impact coal. You're seeing it impact refined products. So that's going to keep this a little wonky in terms of, and a little bit lumpy in terms of when do things get better, because there is a pretty bad drought happening in the region. When you look at just in total, gasoline had another build last week, while gas oil had a small draw. And when you look at gas oil in terms of that chart, you can see it's the lowest it's been. And now the rate of change, when you look at gas oil storage being flat, now you're getting an idea that the comps are getting further away. So the comps are getting harder, not easier. And so things are looking and getting much worse when you're factoring in where gas oil is, and they're trying to import the difference, while refiners, due to just massive increased costs in natural gas, huge increases in electricity price, it is just not economic to run these refiners. So they're just keeping them at minimum rates and trying to manage their imports, exports. All the while, gasoline trending with 2020. You can see here outside of 2020, that's the highest it's ever been. It's approaching the highs, even the highs for 2022. And as we said, this week we expect it to actually take out those highs. Fuel oil, as we're right where we were in 2020, in 2018, 2019. They're going to try to manage this. How much of it can be recracked? How much of it can be exported into Asia, with Central Asia taking down more? These are some of those key pieces. Now, when we look at Singapore, stockpiles down a bit, as you can see here. And one of the things that we've been saying on total stockpiles, we expect it to be perfectly in line with the average. This is going back to 2006. We don't see much adjustment in terms of the average, because we expect light distillates to continue to get worse, while middle distillates continues to be in the bullish backdrop, as resid kind of balances things out. Light distillate at extreme highs, middle distillate at extreme lows, resid just kind of sitting in the middle, resulting in total stockpiles doing that. Here, when you look at light distillate, just a massive surge up, breaking well above the 2020 highs. Again, we just see this continuing to be a problem. We have slowdowns in Central Asia. Pakistan has canceled tenders. They're not buying. Other areas of the region aren't buying, and that's displacing and putting more and more cargoes in Singapore. While middle distillate, on the other hand, continues to fall down and remains at near all-time lows, or the levels that we saw in 06, 07. And while here you can see resid has come down a bit, and that's going to displace, where as resid starts to move, we're going to see more of that middle distillate held back. But just given based on the levels, you're not going to get a huge amount held back. And again, shipping continues to slow, which is going to keep this, which is why we're saying that the residual side, the heavy disty side, is going to remain right around the 17 or so year average. Now on the Fujairah front, reported 23.385 million barrels. It's up over a million. This is the first time that it's been above 23 million barrels since last June, to give you an idea of just how elevated we are and getting back to these elevated levels. Light distillate was the big driver. Storage increased 1.156 million. So again, a big increase. East of Suez gasoline complex remained under downward pressure on the back of weak demand from Pakistan, among other areas. And again, just like as we said before, becoming a problem. Middle distillate, small build of 187,000 barrels. East of Suez gas oil complex was also under downward pressure from a combination of ample supply and reducing viability of arbitrage to the west. Again, that's what we continue to see in terms of those slowdowns on the middle disty front. And again, it's just they're going to purchase more high sulfur fuel oil, heavy disty, which is going to displace middle. Heavy resid fell 332,000 barrels. Remember that switch, less purchase middle distillate, more purchase of heavy resid. While realistically, even though it dropped by 332,000 barrels, it's still 12 million above it's still above 12 million barrels in storage. Fifth consecutive week. So there's still some demand, but it's just things still remain fairly flat. The Brent time spread. You can see that the time spread has really collapsed down to $1.57. This is just showing that there's some softness in the curve now, which just means that you're going to get Brent pulling back, which we've already started to see. Not to say that you're going to get a huge drop, because one of the things that we've been discussing is that we expect second half Brent prices to be about 103 to 105. And again, so far we're tracking pretty close to where we think we're going to be. North Sea crude floating storage starting to creep higher. So North Sea and Europe volumes or storage is going to start to move a bit higher, especially given the issues with the Rhine. Where prices are, which is where we're going to start to see some of the prices get cut in order to compete. Now, the Middle East has got the storage is actually at 2022 highs. This is going to become an underlying problem in terms of, we've gotten a fairly steep discount in terms of where things are in regards to Brent versus Dubai. So as that has gone from north of, close to $12 down to $7, you have OSPs at $9. While people are like, I'm going to buy term and then that's it. I'm not buying extra. And this is the one to watch between the spread between dated Brent and Dubai, as well as storage. This is going to, again, why we think that Saudi is not going to see that increase in OSPs or decide not to increase pricing. Europe floating storage, fairly stable. We expect this to creep higher, again, back to what we said with the Rhine. And that's what we have for you in this segment. So hopefully this was helpful. If you have any questions, please reach out in the comment section on Twitter. And we hope you have a great rest of your Wednesday. Thanks again for watching. I'm Mark Rossano, founder and CEO of C6 Capital Holdings, coming to you from Primary Vision Network.